Cato. Cato. All right. Cato. Cato Corp. New York Stock Exchange. Got an alert for that last week. Okay. And let's go. With no further ado, monthly candle chart. Zoop. Put that price action in the middle. Remember, black space. Makes you think. No biases. And let's start by defining or identifying the monthly candle defined support. And I have it at 1138. Okay, here's where it gets fun. Right here. Maybe here, but definitely here. Breaking out right now. Monthly candles. Implied measure move added to breakout line right here. So if the monthly close for May closes above 1622, then the measured move is 2112. That's the high to bottom added to the breakout line. And it still brings us below, look how my concept of what I call a wall there. Previous support, turn resistance. So you're right underneath that. And I have this thing called target considerations. So no matter what the chart pattern gives you as a target, you always want to make sure you're on the good side of exit. And that's if there's a resistance on the way, important resistance, then you want to be positioned. You move you cheat in your favor. You move the target just a little lower, just before you start running into that congestion, just to make sure you get out and you don't live a whipsaw, and you don't have to work your way through and hope it doesn't bounce in and never go back up. The least time you spend the trade, the better it is. The faster you get to your target, the better it is. There will be pullbacks along the way. But if you're able to get to almost the implied measure move and get out, it's good. All right, so this is what it looks like. Could even see this nice stop right here. I don't know if I did a previous post. Maybe I'd have to check my Twitter feed. But this was a definite breakdown right here with two targets. This target and this target. Two targets, two patterns which share the same breakdown line, which make a bigger pattern. And here was the candle that broke down right here. Candle closed below that. And they both reached their targets. See, one of them reached. Whoa, look at that. That candle came back in. And then down it goes. Wow, that candle is nasty, man. Even if I would have put my sell stop here, I would have got triggered out. Always use your risk and money management no matter what. In case you get greedy or your sell stop, you put it too close. Always put that 1% max of your NAV lose for when you do your position size, just to make sure when you have these crazy candles that happen, that it won't hurt you that much. And okay, so now this is it. If we have a close above 1627, let me just confirm that. Yeah, 1621. Then we have that implied measure move to 2112. But all this is for Stan Weinstein. to make sure we have the wind in our sails. And what do we have here? Zoom, 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 zoom. Okay, this line here, 1727. It's actually 1721. Let's put it just lower. Can I? 720. The weekly defined breakout line, just a little higher for this closer pattern here. Remember these on the monthly, all that the delta here between the weekly defined and the monthly defined breakout lines. Well, that's the noise, and that's what you see as a wick on the higher trends. And since I draw my breakout lines on the opens and closes of the candles, whatever protrudes out of the body of the candle, the wick, is that noise on then you see on the smaller time frames. And yeah, that noise is also equivalent to human emotions or the excessive buying or selling of the market until the prices adjusts, and okay, this is what the price is going to be now, so it's like the elasticity represented through the buying and selling, the spikes, or just people buying at different times, selling at different times, the pressure, whatever reason, that on the monthly you see that through the wicks. It's attenuates all that grinding of actually the price fixing itself in the price chart. All right. What do we have here? 30-week moving average starting to go up. Horizontal breakout line, we're above it, or even above the weeklies, which is closer to $17. And check it out. Do we have? Whoa! Where's my arrow? Here. Not quite twice the average of the previous 4 to 5 weeks. It's just not quite. You would have liked to have a candle like this here. And that's what I sometimes do, is I go back, I look at these crazy candles and see RSI starting to go up, and I check, was this the breakout candle right here at the bottom here? Well, not the Stan way, because the Stan way, you need to have the breakout, you need to have the 30-week moving average starting to go upwards. It's actually going downwards. So this is embryonic. This is part of maybe the beginning of the move, and that 40 to 52% move that Stan looks for to make sure it goes up. It pulls the 30-week moving average up, and you're starting to have the trend really going to your favor. It's a good, healthy sign for end of a stage 1, beginning of stage 2. But it wasn't quite there yet. There's more overhead resistance. And here you have all the Ichimoku cloud. The red cloud is the Ichimoku cloud resistance, defined resistance. And this is what is slowing me down before entering. The RSI is still going up, not through halfway. I would have rather seen it go halfway going up. I don't have the volume yet. Not A++. Plus, you have all that cloud. Price action usually is going to go like this. Maybe pull back. Maybe start going back up. And maybe explode later on at a higher level. And as time moves on, this previous resistance is going to start evaporating. You see it's going lower and lower. And usually, you'd like maybe to have the price action go through here. Imagine, you can start imagining yourself the tunnel. And when you have that $17.50 breakout level, maybe we'll have it here just 2, 3, 4 months later. Or it's going to go up here and work its way through, and then we have another breakout with hopefully a candle like this, with twice the average volume of the previous 4 to 5 weeks. And maybe by then the RSI is going to have gone down and then start going back up halfway. Imagination, guys. Imagination is key. But not just the clouds and greed or fear-driven imagination. I'm talking about purposed imagination. I'm trying to use that word more and more. imagination based on your framework, based on what the behavior of the stock you're imagining. Not, I'm going to be a millionaire, it's going to hit 50. Oh, that imagination to the moon. Just imagining how the chart could morph, how it could construct, how it could change, and the key elements you'll be looking for. You'll be looking for pullbacks on contracting volume. You'll be looking on candles breaking above horizontal breakout lines, above Ichimoku clouds with twice the average volume of the previous 4 weeks. You'll be looking at, if you don't have the Mansfield indicator, you'll be looking at the RSI going upwards through the halfway point. And most importantly, you'll be looking at the higher trend, monthly defined, and hopefully have a close above an important monthly defined resistance. So that's how it builds. The way I see it now for Cato, we're probably going to close above the monthly defined resistance, that the 1620. But we won't have the Stan Weinstein breakout because of the Ichimoku cloud resistance here. But it's okay. So we know that any time, any week in June, after we had that May confirmation on the monthly candle trend, if it takes 1, 2, or 3 candles in June, and then we have the close above 2112 or wherever the cloud may be at that moment, then that's where I'm going to enter. And you see that target? This was a target for the monthly, the 2120. And I'm seeing this over and over, that the bottom pattern on the monthly, its target is, it's closing in on that resistance that we see on the weekly. So we might have actually, it'll be a little early. The bigger pattern to play on the weekly is going to be probably imagination running wild. It might be, well, see all these low lines? So maybe this is going to be the bigger pattern that we're going to have. And that will be our this level or this level, maybe here even, just a little higher. This will be our super duper bigger pattern where we're going to play on the stage 2. And check it out, guys. It's like magic. And look at that, the target. Smack what I call the wall. Previous big pattern, previous support. Broke down. What is it now? It's called resistance. And the target will bring us all the way back to 34.95 or 34. So this is pretty much embryonic. If we'd enter here, Ichimoku cloud resistance, you could go in, you could enter here, but you have to expect a pullback around these levels here. And if it comes down on low volume and comes back down here, it'd be another occasion to enter. And after that, another test of that breakout level. And after that, woo! Dare I say, to the moon. So that is my imagination of how this could construct. And it could well not do that. But right now, what I'm trying to look at is, do I have an A plus setup? And the answer is no, because we don't have the volume confirming the breakout. We have that overhead resistance right here defined by the Ichimoku cloud. So it's just a question of wait for Cato. Let that move up, let that 30-week moving average go up. And if we have to wait until the price action consolidates at a little higher level, then we'll get in for that big move all the way back to 34, guys. All right? Sounds good to me. See ya, Cato. Ciao.